Hey traders, what's going on? Jamie Saettele here. It is 2016, January 7th, to be specific. So let's get started with kind of an opening note that I've been thinking about now for several weeks. And it's not necessarily right now about the current markets. We'll, of course, get into that. But I want to focus a little bit here on kind of process, okay, and some things that I've been thinking about through, kind of a lull period, really before this week started. So, as I go through my last 2 years of trading, really since I started doing kind of a service type of thing, we've got up 88% in 2014 and up 40% last year. Now, those are just, of course, based solely on the published trade ideas, okay? Now, those are fine results, but they're extremely inconsistent. As you would know, you've got pretty much short bursts of really big gains and kind of long, drawn-out periods of small losses. Now, in a way, I'm actually okay with that because most retail traders actually do the opposite, where they will kind of have a bunch of small winners and then they'll wipe everything out with a couple losses here and there. So, and sorry, and it's something that I want to work on as far as consistency goes. So, there's the diagnosis. Okay, why such inconsistency? All right, well, I came up with some notes, and basically forcing analysis, publishing charts and ideas for the sake of publishing ideas. Sometimes there'll be a lot to present. Other times there will not be. This includes the stream. Okay, so for example, today, been pretty active on the stream because, well, the markets are pretty active. So, if the markets aren't all that active, then don't expect a whole lot of stuff to be published on the stream. Really, the same can be said for the swing updates. If there's some good ideas that we're focusing on that are working out, then I'll focus more on those ideas and get a little more intricate into those ideas rather than just, kind of looking for another trade because I feel like I need to give another trade. Okay, so the solution here is just to step back, slow down, stay with the good ideas longer, which is my biggest goal for the year, really. Cliche, let the winners ride, but that is my biggest goal for the year, and it is really true. Abandon bad ideas quickly. I have no problem with that. I've never had a problem with that. Basically, cutting your losses short, that's not a problem. Scale in and scale out more. Okay, so you can see right now with the dollar Swiss idea, for example, I'm actually kind of doing that right now. So we got in, this was actually December 30th, 99.03 entry. Took half off at 101.20. Okay. There was a big level up there. You had, fib confluence, just to bring that chart up real quickly. Dollar Swiss, right? You can see the March high was 101.26. You had a 61.8 retracement there, around there too. So we got out of some of the position there, even though I have a longer term, idea that dollar Swiss could end up going, well, a lot higher. We got out of some there, looked to add on a pullback of holding support, which on the short term, we're actually kind of at it now. Talked about 99.90 last night. We'll get into that here in a moment, as far as the current market and everything else. Okay, and scaling in and out means scaling out up here, and then if we start holding support, getting back in. Okay, scaling out at higher levels, getting back in. Okay, et cetera, et cetera. Obviously, at some points during really big straight line advances, you're going to lose out on some. Not as much as you would have had, but for the most part, it probably end up doing a little better over the long haul, given that markets rarely move in the straight lines. Even though we have seen some of those lately. Okay, so that the goal is consistency, and that's what I'm looking for with some of these changes. Okay, other things that I think will add to this. I will publish, of course, stuff on non-dollar crosses, right? You've seen, for example, just in the last few updates, I've put some stuff out on pound yen because it's compelling. I mean, crap, the RSI on the daily chart was at like 10 or something. In fact, it's 11. So we haven't closed the day yet, but at this point, it's like the lowest it's been pretty much ever. And that includes the financial crisis of 2008. So, pretty interesting stuff there. I'll publish ideas on non-dollar crosses. Euro Kiwi is one that we're following. Euro Pound's one that I'm following. Okay, for example, right here, we could complete a head and shoulders here, and we'd have a target way, 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 way higher than this. So yeah, I'll publish stuff on these crosses. Okay, but for the most part, I am more than likely going to be overwhelmingly trading dollar crosses. Okay, and the reason for that is when I've had my most successful periods, that's what I've traded the most, is concentrated on dollar crosses. Again, you're concentrating on a few pairs. It's easier to manage risk that way, in my opinion. If you end up long euro dollar and short pound dollar at the same time, awesome. You end up long euro pound, so be it. Okay, and that brings up the next point. Some of our most successful clients, they kind of use us for idea generation, maybe levels, but really they fit, what we're giving them into their own trading, right? Everyone's different. Everyone has their own personality. You're not me, I'm not you. And so everyone's going to trade differently. Obviously, it's completely up to you how you want to use the service. If you want to just strictly follow the trades and forget everything else, that's fine. But you're going to get the most out of everything and learn the most about yourself too. And, in my opinion, if you really, make an effort to use our analysis and our levels, and see how it works for you. Okay, so there's my little opening print for 2016. Now let's get into these markets, which are, 2016. What a start. So let's not forget, I'm keeping this is the 1230 post, the long-term maps and all that good stuff. I'm keeping this front and center on it's going to be, the link's going to be on every post, okay, for at least while it's working, because I think some of the biggest opportunities, and when I mean big opportunity, I mean like where you can go, into a position with size and a tight stop, with huge potential, I think are going to come from this post. Okay, so the dollar weekly analog. Okay, let's start there. Okay, so remember, we're following this analog, and it's pretty much it is the direct opposite of what we've been looking at as far as the, the euro analog that we've actually been following for a pretty long time. And I'm sending that analog over to guys at banks at Citi and whatnot, some friends that work there, calling me crazy and stuff, saying like that the euro is going to rally back when the ECB came out and everything else, and because they've been positioned for shorts for a while, and they got run over when that happened. But interesting note, they actually got out today of their short euro, so that could be a good thing if you're looking to get short euro up here into resistance. But here we've got the dollar index. So generally speaking, we are kind of looking for this march higher, okay, before really failing at some point in mid-January, okay? And that, we'd be then looking for a sell-off. So what we're looking at really in the first quarter is a broad topping process. So kind of more of the same of what we had going into last year, where we'd have these rallies and these sharp declines, rallies and sharp declines, rallies and sharp declines. That's kind of what we're looking at, okay? Now, in the event that we start to break some lows down here in the dollar index, yeah, it'd probably be wise to, maybe look at the short side, okay, in the euro. But let's look at the short side in the dollar, long side in the euro, on a more sustainable swing basis. But let's look at this euro chart. So here's that analog that we talked about, right? Again, the low that we were looking for back here was a couple weeks late, although it did put out a special report a couple of days before it. And if we're getting back on track with this, and we might be, remember we put out in that 1230 report, we're at a point where the euro could turn down, okay, and that was, right here, right? And so we have turned down. We're only in the second week here from here, and what this analog suggests is that we could kind of trade lower in a choppy fashion, and maybe even come close to the lows before we turn up again very sharply here at some point in February. And if we follow it to a T, which at times we have, we'd actually be looking at a high tomorrow. Okay, so keep that in mind. Euro here going up maybe into, I got 10, really the resistance zone, if you will, is kind of now 108.72, which is where we opened Sunday, if you will, which is the yearly, monthly, and weekly open. So I actually kind of like that, the fact that the yearly open was on as a new week, because that keeps my charts in line for the rest of the year. Because if you remember last year, if you look at a weekly chart, the year open would look different than if it was on a monthly or daily chart, because the week, if the new year does not start on a new week, like it's on a Sunday or a Monday, you end up with different levels because the week starts at, the new year does not start on a Monday, if that makes any sense. So basically here to about 109.28, which is daily reversal resistance. Okay, and of course we got Friday tomorrow, so maybe you get the Friday high or something. Again, there is a bullish count here, wave-wise, with this being 3 waves down, and we did more or less bottom where we should have, so to speak, right? 100% extension to the downside, overshot it a bit, but on a closing basis, it was right at it more or less. 61.8 retracement as well, same deal, 107.35. So, meaning that if we do start to, really improve the short-term momentum picture, don't get stubborn and short this thing, because we could be, rallying ahead of schedule. That's what I'm saying. In any case, my near-term focus is on resistance in euro. Okay, so that's where we are in the analog right now for euro and for dollar index. Okay, the euro being kind of the clean one as far as looking at this being potential high point for tomorrow, and then leaking lower. Okay, really, throughout January. What about the seasonals? What do the seasonals say? Well, seasonality for the euro actually is pretty bearish for, after this week. Okay. Raj says, are we looking lower or higher? Well, I think I was pretty clear on that just now. We're looking lower in the euro. So this is resistance from 108.72 to about 109.28. I'd be looking for resistance up in these regions. Again, NFPs tomorrow. Okay, so talk about an NFP strategy here in a little bit, but I'd be looking at resistance, to sell into. Okay, given everything I just talked about. Okay, also seasonals, again, bearish starting after tomorrow into basically early February. So that actually fits the analog really well. Dollar index seasonals turn up after this week, okay, and are bullish into February. So again, that fits the analog really well, is basically looking for, high for a sharp move lower, as per that analog. So that's kind of the map again, right, for the, for the near term. Okay, let's check out what else we had on that note from 12:30. Okay, yearly, we're looking at yearly, euro dollar, yearly, pound dollar, right? So pound dollar is taking quite the beating. Someone had just asked me on Twitter if I had anything good on pound, and I actually, at the time, did not. And then Mike, I was talking to Mike, I said, hey, do you have anything good on the pound? I said, there's a guy asking me about the pound. He said, actually, it's like, yeah, I do. So hold on for a second. Where are we at? 99. Stock's coming off again, I guess, right here. Yeah. As the dollar is taking a little bit of a turning down, and see dollar yen turning down on everything else. All right, so in any case, he asked if I had anything good on the pound. I really didn't, but there actually is stuff here. So if you, it's kind of like a weird way to draw the fork, but it the most important thing, and I'll say it time and again, is to just describe price action. And this certainly describes price action. I mean, look at the touch points that you get here. Okay. I mean, you've got, very good touch points here and here. It cuts through a bunch of these levels here. Okay. In fact, like 4 days in a row. You can draw some parallels and you get some really nice touch points as well. And the median line, of course, touch point here, touch point here. All right. Today. So we did break a low. 2015 low, in fact, so we traded below last year's low today, but we've bounced up to this level. So you could get a pop from here in the pound from the median line. Do be careful. Just because you're at the median line doesn't mean that you have to rally. It just means that it could rally from here. In fact, there's people look at median lines and they think, well, it didn't rally from the median line, therefore this doesn't work. That's not really how you want to look at it. You want to look at it like saying we're at a really critical point because we're at the median line. Okay, if you get a gap below the median line, that's just really bearish. And it just means that you could fall really hard, really fast. Okay, so that's also something to watch for. So when you're trading around a median line, it simply means that you are at a critical point in time and price. Okay, and the market, you should be up for some big action. Okay, you should be up for the market's either going to rip off of this or it could, tank. And again, we have the, the median line and the retest trade, right? Where if you drop below, you'd look for it to come back and test this thing as resistance, and that would be your trigger to sell it. It doesn't always happen. Sometimes it just goes below and it tanks. Okay, but if it does come under here, sometimes you get near-term exhaustion. It comes back in, you get this as resistance, and then it goes lower. So that'd be something to watch for. Again, pound, we get that 143.90 level. I'm not really going to go through it like right now, but you know what it is. If you've read this post, the 1985 close, 143.90, in line with the line off the 1985 and 2009 lows. Okay, so that's the big level I think that one should pay attention to as we move forward in time here with pound. Okay, so what else we have? Obviously, dollar Swiss. Dollar Swiss, we'll get into that. Dollar yen. Well, dollar yen could be looking at something quite different for dollar yen. Well, that's already happened. Right out of the gate, dollar yen is just completely kind of taken over. All right, as the the dominant theme or story, if you will, in the FX market. Notice that the euro is actually stronger today than the yen is. In other words, the euro is actually taken it's even more of a funding currency at this point, okay, than the yen is. And the same thing really did actually happen back in August for a time. So it shouldn't be all that much of a surprise. All right, so let's get into some of these. It's kind of the 1230 note. I just want to continue to focus on that because it'd be a shame to miss out on some of these huge things that we'll be following. Like the dollar story going to, if we get to new highs and then looking to fade it, et cetera, et cetera. ES 43, down 43 points. Okay. Okay, so the euro. Kind of get rid of this for now. Just really short-term one. So the chart we followed yesterday, we had this. You can see the support we were looking at. We actually ended up getting low in Europe at 107.70. I had actually put in a buy order myself at 107.70, and it didn't hit. It missed it by like 1 pip. So how does that happen during a volatile market like this? I don't know, but it did happen. So in any case, here we are now back at where we started the week. Okay, 108.70s. And this area, some resistance here. Obviously, we've traded off of it all morning. This is like the 1, 2, 3, 4, 5th hour that we've hit it. Looks like we're going to try to push through this thing. So as we get towards the end of the day, what I would be watching for if stock losses accelerate and the euro gets even more funding currency-like, gets bid up as it's doing right now as I'm speaking, you'd probably be looking for, at some point this trend line up here, okay, which 109.28 is your daily reversal level. So 109.28 is a big spot, in my opinion, to watch for. Oops. You can see I have this fork drawn here. I was simply just following simple trend line off these highs, which is actually the modified shift. It's the same thing. It makes a channel for you. So you can see how well this worked, obviously, getting support down here. And then tomorrow, the intersection with 109.25 daily reversal level. It's 109.25 on FXCM. It's 109.28 on a different feed, call it 109.25, whatever. So that's going to be resistance as far as I'm concerned. If you go through there, the story starts to change, of course, as far as getting more immediately bullish on euro. But I'd be looking for some sort of a pullback there. All right. But just keep this level in mind, 109.25 in the trend line. As we get later in the webinar, I'll talk about NFPs and what to watch for, particularly with euro. But as the market trades tomorrow for the first 30 minutes, what you want to do and how you want to trade after it. Okay. Pound, we kind of already went through a little bit. We got the median line getting a little bit more of a bounce here as the dollar sells off. Is it a matter of time until the Fed comes out and says that they are going to cut rates because they're worried about the stock market? Wouldn't be all that surprising to me, at least, but such is the time we live in. So in any case, pound dollar, again, it's okay in my opinion to look higher off of this level, especially given the streak of down days that we've had. I think it's 8 in a row now. That's actually really rare. In fact, I was looking at this earlier, how rare it actually is. You've got, here's pound dollar streaks of 8. So obviously today's not over, and we could end up closing higher, so it'd be 7. But you can see 8 is rare. We only had 2 last year, and they ended up being 9, and they were both at pretty big lows. And even in 2014, 8 days was before a big rally. You did have 8 days in the early stages of the decline. The market ended up stabilizing for 2 days and then fell off a cliff. So do you want to be, it's not the holy grail, of course, nothing is, but you get the idea. Streaks of, 8 days, it's pretty extreme. And, the most important thing is we do have a point of reference as far as looking at a bounce of some sort for cable, which is the median line. Okay. Aussie and Kiwi, right out of the gate, just completely falling apart. So I've got this line that I want to use, and I hope you don't take offense to it, but some of you know, I had a really bad flu. My whole house did. My wife did. It was terrible. They had to take my mother-in-law had to come get my son so that we wouldn't get him all sick. He's not even 2 years old. And then she ended up getting sick too. This was earlier this week. It was terrible. So while I was throwing up and everything, Aussie and Kiwi were also throwing up. Get it? So yeah, it was a bad start to the year for me and my health, as well as the Aussie dollar. Anyway, back to normal now. And Aussie dollar this is what I would follow now. Again, Aussie and Kiwi look absolutely terrible on these long-term charts, as in like these things could tank hard. Okay, we've failed again. It took weeks and weeks and weeks for us to get up into this resistance. And just when you thought maybe there was a chance of a bigger bullish break on the upside, we talked about in some of the posts, especially with Kiwi, the chance of this thing really falling apart. And Aussie, Raj asking, would you put an entry for Aussie Kiwi today? Raj, I'm going to go through the charts here, okay, and we'll talk about the levels. It just need to kind of slow down and take time, okay, in looking at these charts and understanding the levels. Don't be in such a hurry to put on the trade, okay. In any case, looking here at Aussie, a few things stick out. Obviously, you've got the long-term, what we're terming basically the golden resistance lines or golden slope for Aussie. These levels, which have been very useful. The next one obviously would be down here, okay? A level where we'd be looking for potential support, but if you broke below there, it's kind of, good night for even longer. But something to bring your attention to on just how bearish this could be is okay, so see the trading down here? See how this low is down here? That's a lower floor. Okay, so we have a lower floor. We also have a lower ceiling. Okay, so the implication, lower floor, lower ceiling, you get another lower floor. So what we'd be looking at is for support to not come in until down here, till this line. It's a weekly chart. All right, and even if that were to happen next week, it wouldn't be until 65.70. And remember, we talked about the double top in recent posts. From here, that double top is 66.50, excuse me. So that would be before here, but slope-wise, you'd be looking even like 100 pips lower than that. All right. So we do have certainly some big bearish potential here on Aussie on the weekly. Now, what about on the daily? Okay, what about getting involved in this idea? Well, obviously been quite a move to the downside, and we haven't held any support really that I've been looking at. 70.15 was the last level I thought you might end up getting some sort of some sort of bounce, and then looking to sell the high volume level at 71.27. We've obviously spent some good amount of time down here below 70.15, but we're trading right at it now as I speak. So I wouldn't necessarily call this a break yet. See what happens at the end of the day. What I'm going to follow are two slopes. Really, the one that I want to follow the most is this one. Okay, so this is this chart here that's got a bunch of crap on it. This is kind of like my little algo chart, if you will, where it gives me signals that I, can decide to take or not. And I'll be watching for levels on this, signals that coincide with slope over the next couple of days. Okay, so the level in question that we're talking about as far as entry still being about 71.27. Okay, high volume spot there. Okay, and if you want to know what that looks like, I'll show you right here. Oh, we just had another one actually last night right here. So whenever China opens, the last, well, 3 of the last 4 days, China opens and the Aussie absolutely gets smoked. So this is China open. This is China open. This is China open. Chinese are really doing a number on the markets, huh? So what we've got is volume actually failing now. So if you really wanted to, you could be short with a stop literally above the high from 3 hours ago. Okay. So that would be short with a stop of like 70.35. It's like a 25 pip stop. Okay. I'd be looking for at least a move back to this median line and more than likely a move into 71.27 at some point in order to sell. Kiwi, similar story as far as the downside potential here. Talked about this in recent posts. You know, one good thing about a little time off from the kind of from, you know, looking at the market so much, right? And less screen time really is better. You get kind of time to think about what's going on. But I was going over long-term charts at the end of December and saw this. I was like, oh man, we're at huge resistance now. You know, I knew we had the 200-day average up here, and we tried selling Kiwi at the end of the year. If would have held on to it, I guess it would have been a pretty good trade at this point. But, you know, we had this big median line, and this was no ordinary median line. This was a median line that was huge support back in February and March of last year. Okay. So I was like, well, we've got this just giant level, right? And I mean, it was make or break. If we go through it, you're talking about the next level being, you know, up in the 71s. But it's pretty clear when you look at a long-term chart that this is a downtrend still, okay? And this has to be looked at in the context of a bounce within a downtrend. Even if it's a larger correction, you can still go down and test the lows or get close. Okay, so we've already reached the trend line at this point. So again, Kiwi's holding up a lot better than Aussie, of course, doesn't have as much exposure to China. If Kiwi's going to bounce, well, we already have bounced. I outlined 65.90 as a support level for today. Today's low is 65.90. So here we are, kind of bouncing, and a couple levels to watch for resistance moving forward. Going to be this one right here. Okay. I'd be looking at 67. I have 67.60 marked here, but I wouldn't be looking necessarily that high. 67.35, maybe to 67.50. Hey Gary, what's up, man? I'll get to dollar yen right now, just after Kiwi, okay? But for Kiwi dollar, excuse me, probably be looking at 67.35 to 67.50 as far as resistance. I'm actually going to more than likely follow this line right here. You see this line? Okay, because that was the latest big support, and it was actually support before the latest break. So if we get a rally, okay, then this ends up becoming your big resistance. I guess it would be ideal if you ended up getting all the way up to 67.60 at some point over the next week. Obviously can't say if it's going to happen or not. I have no idea. If it does, it'd be awesome. We have opportunity for a bigger short up there. Okay, but just know that you're at support right now in Kiwi, and actually from a lot of stuff. You've got the trend line here. You've got this trend line, which is a former resistance line, which comes in. Okay, momentum on the downside is obviously strong, but Kiwi's holding up well. You got actually working on a more or less a doji today. See what happens the next couple hours, but Kiwi's holding up really well. If we were to rally from here, you've got 35 is actually the 61.8 level. Okay, so that's why I've got 35 marked down. All right, dollar yen, let's get there. Actually coming in pretty close to a level. Oh, S&Ps are getting close to the lows. It's about time for CNBC to have their markets in turmoil segment, don't you think? So dollar yen. Okay, so here's what I think you'd want to follow at this point. The first level is really about 117, and we put this up here on Twitter last night. But you've got 17, really right at 117 actually, is this median line. Okay, now look, as far as the big picture is concerned, go to that long-term page and look at that monthly chart. I mean, you've got we've broken an uptrend here, okay, and we're probably headed back to the 105 region, right? You have a completed 5-wave advance. You're making kind of a textbook head and shoulders. Talked about that with the volume implications. And I'm being told Euro's almost, Euro's almost 109 already. How come every time I start my webinar, the market starts to move? Again, watch 109.28 is your daily reversal level for Euro. Okay, so we have broken support on this, but if you were around in 2008, you know that the market can see some pretty big short covering moves. Okay, so short covering moves. So what you're going to be looking for is levels where those short covering moves could end up happening, and well, 117 is one of them. Okay, so here's 117. It's just below where we are right now. It's going to take a lot, one would think, for the S&P is down 50 points. Dollar yen's really not that crazy. I mean, it's not like August 24th, right, where we were down, 500 points or something. So that hasn't happened yet. Okay, eventually, this area down here is going to be of interest. Okay, down in the the 110 region. But the first level I pay attention to is 117. If the market breaks below 117, then you actually can kind of be bearish against whatever the high is on a daily basis above the median line, because the breakout at that point would end up being you'd have a median line break and you'd be looking for a retest of the median line to get short actually. Okay, of course, if you're already short, you would just hold on to it, maybe sell more. You can see this right here. Throw this on there. Could say that we're already at support, but I'd kind of rather stick with the idea that we've got a little longer to go because, well, the momentum is clearly on the downside, so why fight it at this point? Gary, what would be your bearish invalidation? Well, I mean, look, I mean, from a completely objective viewpoint, the bearish invalidation level is all the way up here at 124. You have to understand this is going to be a really, really hard thing to trade. There's going to be the Bank of Japan coming out and saying stuff. They're going to try to fight this yen strength. You're going to see spikes like this. Okay. It's not going to be an easy trade. It's not going to be a smooth trade. Okay. So you can't get real tight with your risk on this because there's going to be a couple 100+ point rallies in dollar yen on the upside, even if this is a much larger, more significant decline. Okay. Just look back to 2008. And okay, here's 2008. This is the financial crisis. This was not a smooth ride. There were lots and lots and lots of counter trend rallies, and they were big. Okay. Here was a breakdown, 111.80. I mean, you had 800-point rallies. Okay. 107 plus to almost 114 plus, almost 115. Okay. I mean, you had huge rallies take place. So, there's going to be, just kind of be aware of that. It's why getting bearish on breaks, in my opinion, especially on something like yen, it's going to be difficult to do that. Probably not the smartest idea. I want to wait for, in my opinion, get a better reward to risk opportunity. Let's take a look here at might as well look at the S&P right now because it's falling off the face of the earth. Okay, so here's SPX 500. Again, this is not the futures contract. This is CFD. Something to watch. Well, let's try what we did with the pound. Remember, this is what Mike had drawn with the pound. He'd kind of gone into drawn us some really weird highs and lows. Might be something to watch for. I can dig this. Okay, so the levels that I'm watching closest are still this slope, the original one from way back here. By the way, how'd you like that move back to yesterday's low this morning and then straight off a cliff again? Pretty interesting, huh? Some of these technical levels are pretty good, even in these crazy markets. But, watch down here. You might just want to save yourself the stress and follow the weekly chart because, again, this slope line, so many touches throughout the last couple decades, and you didn't hear me wrong, I said decades, and it was the line that came to the rescue twice in, September and August last year, and it's at 1900. Okay, that's not very far away. It's 45 handles away. Okay, to give you an idea, the market right now is down. The S&P is down 47 handles. So the way things are going, we could be there by tomorrow. 1900 on this CFD is also the high from March of 2014. It's also the low from August of 2014. Okay, so I would be focusing, if you will, on that 1900 region. All right. this is a long-term chart. So like if you see the market trade below 1900, for a matter of minutes, don't go saying that the market has broken a huge level. Okay, it's not going to be resolved in an hour. Context is key when you're looking at these charts. But like below here, and the market stays under here for a number of days, okay, then you're talking about a real bear market, in my opinion. Okay, and like a real bear market meaning that we go back and test not just the median line, but maybe test the breakout highs that we broke out of. We broke out of in 2013. Puts us all the way back here, below 1600 or something. I mean, it's been a complete disaster and a mess. I mean, think about this. We haven't gone anywhere for 2 years at this point in the S&P 500. And, I actually, there's a lot of people out there that expect to crash, if you will. Maybe it'll happen. I don't know. I just feel like so many people are looking for it that it's not going to happen. But I wouldn't be surprised if we trade between these levels for a while longer. Maybe we go back down here, then springboard back up. Markets have a way of surprising people and doing what people don't expect to happen. And I don't think a lot of people expect us to continue to go nowhere for a long time. So S&P 1900, know it. That's on the CFD chart, okay, not the futures chart. Prices are going to be a little different. Let's look at, I'll go back to FX. There was a question Raj had on dollar CAD. Sure thing. So dollar CAD, Raj, this is a chart I posted last night, and it was to the T. We got that resistance level, right? So be, cognizant that you have hit this level. Now, last night's note did mention that a pullback on this. CAD continues to get drilled with crude oil. See what I did there? Google News of crude oil reviews headlines with tumble slides, blah, 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 blah. Words are appropriate, of course, but this language is typical before a counter trend bounce. For dollar CAD, there are upslopes in the 4160-80 region. Okay. Here's an important part that you want to pay attention to. If you look at the structure of the rally from the 1-4 low, it does appear that a pullback would most likely consist of a fourth wave and give way to one more high. So pay attention to the upslopes. Okay, so what that means, so here's what we were looking at, right? Last night. And here's what that means. What I'm talking about is, go to 240-minute chart. All right, is you can see, put it in like a line. You can see if I put it in a closing chart, which is lines, you can see how this 1, 2, 3, 4. So this pullback is a fourth. Okay, one more high, 5. So that's what I'm saying. I'm saying that you could get another high. Nice pullbacks from resistance, but you could still get one more high to complete 5 waves from basically where we opened this week before you get a more substantial potential for a turn to the downside. Okay, that's what I wrote last. That's what that means. Okay, so just be aware of that is all I'm saying. Raj, I know you also had a question about pound dollar earlier. You said, the bounce here, where would you be kind of looking at if we did bounce? Well, we are bouncing, right? But if we continued to bounce, where would be a level that I'd be kind of paying attention to? let me add, excuse me, I sneezed. Sorry, excuse me. This newfangled slope that we've got here. The level that I'd be watching first, Raj, would actually be, I'm going to get rid of this thing. Hold on. Would actually be 147.30. Oh, that would be really nice. It's actually, if you draw that, you can see if you draw that 147.30 level, that's where we opened the year and the week and the month. Did I just say that all week? It's the weekly, monthly, and the yearly open. You can see how there's supports here, 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 here. Okay, so that's basically in line with tomorrow, 47.30. That'd be where I'm looking, as far as that'd be the first area, in my opinion, to get to be out. If you're trade, you got to know what your trade is, right? This is a counter trend trade, okay? So you don't want to play for the hero 1,000 pip rally or whatever, because yeah, that might happen, but more than likely it's probably not going to happen. So you're going to encounter resistance along the way, if not go into continued down to weakness. But yeah, that would be your first level, in my opinion, 47.31, as far as looking for resistance is concerned. So that's pound. Kind of like how Kiwi's continuing to hold up pretty well, right? Let's look at a few different things here. Let's look at crude oil is bouncing from an interesting level. The bond market is probably one of the most important markets to watch at this point. Okay, 30-year bonds. Again, bonds tend to top in these panicky environments. So that's why you want to watch the bond market, because the bonds, at this point, bonds are at resistance, okay? And if we trade up even up into 157 in 10-30 seconds and pull back, that would be in line with, some sort of a stock market low. But if we blow through this, then bonds are going to rip higher and markets are really in some serious trouble. Okay, so this could very well be, everyone wants to call the end of this bond market. This could very well be just consolidation before we go on yet another leg higher in the bond market, crazy as that may be or may seem. Okay, so that's why I'm paying very close attention to the bond market here. Over the next day, couple days, as long as we're up into this resistance. This is probably the most important chart at the moment. Mark, so bad NFPs could be more QE or lower rates market like that. Yeah, I don't know. We'll see. I don't know if the NFPs are going to be that big of a deal, given what is going on here in the given what's going on in China, which is just a complete mass exodus of capital and rebalancing in the world, global economy, global financial markets. Euro talked about how it could trade higher. In last night's note, we talked about the Euro additional strength possible, especially in important support that held with DAX support not until about 9,800. Well, the DAX is at more or less 9,800. Okay, what's today's low? Today's low is 9,808. Okay, so again, this is, I've said it for like months now, I think, but I think this is probably a better or a more important chart because it actually makes some sense than the S&P chart. The S&P chart is just such a disastrous mess that, it's kind of hard to be bullish or bearish because it's like, it's just all over the place. That's why I'm looking at that weekly chart on the S&P, because the 1900 level is clear. Okay, it's the slope and horizontal levels from the last couple of years. It's clean, so it's like I'm just going to wait for that. If we stay above that, fine. Okay, but if we go below it, then the markets are screwed again for the third time in like 15 years, which by the way is very rare. If you're a student of market history, you don't get like one generational. You get like one generational bear market. That's why they're called generational bear markets. If we get below 1900, we could be in for our third generational bear market in 15 years. That just doesn't happen. So, yeah, not good. But here we have the DAX and why I would be following the DAX so closely. Pretty obvious. I mean, 9,800 doesn't get much bigger than this. Okay, so, again, if we find low and bounce, and this is a huge support, so again, not for me at least, I don't think there's a huge reason to not look for this to hold. Okay, I mean, forget the fundamentals and everything for a little bit. If you think I'm a complete idiot for saying that, then just ignore me. But, I would be looking for this to hold. I mean, it's not like you had a complete failure at a low level. Okay, you had failure up at the median line. Okay, it's pretty much in line with what we've seen previously. We've seen failures at median line and pull back into support many times. Not saying this rally isn't long in the tooth, but this is support, so you would be looking for this to hold. Okay, as far as the DAX is concerned. Okay, if this goes, just don't stay married to it. Change your mind. Okay, but again, if we hold here and rip higher, then we're going to see the euro trade lower again, just like we, are suggesting with the analog that we've got going on back in the 97, 98 period. Where you'd be looking for the euro high tomorrow. What else did I want to look at? Oh, we should look at gold, I guess, right? So gold finally catching itself another bid. So at this point with gold, here's your spot I think to probably look at is this parallel up here, in line with the low from 2014 November, which is like 1131. Okay, that would be the point to look at. So there's still upside here in gold, and the fact that there's still upside in gold to me suggests that there's actually probably still downside in dollar yen for a little bit. Now 1130 is not far away, right? 23 bucks on the upside can be reached pretty quickly, especially in this kind of market environment. So this could be reached over tomorrow for all I know. I mean, NFP's tomorrow. So pay attention to the gold market. 1130s, big spot. Even if the gold really has turned the corner for the 100th time in the last year, sarcasm there. But even if gold has turned the corner, I do think that you get a pullback from near 1130. Okay, that would be a big area to watch for. As far as support's concerned, haven't done a whole lot on this. I don't know what this looks like, if you have anything good there or not. Not really. That could be something to watch. I would keep it pretty simple and just be, at this point, I would just watch this median line. If you get weakness at some point, it's obviously looking out a bit further. I'm not talking about like the next day or so, because this would be a pretty big move. But this median line, right? You've had some pretty good inflection points there. We talked on the long-term page. It talked about if we get above the median line, you want to look higher. We were above the median line. Okay, we broke above it yesterday. You can see it was resistance for 2 days early this week. We've had some good inflection points there before. So if you came back in gold or came off a little bit, that's where you're looking for support, in my opinion, is down here on this median line, which puts you probably not that far from where you were at the August or sorry, the July crash lows in the 1070 region. In fact, draw a horizontal line there. You can see it puts you right around there at some point towards the middle of the month, actually. So it could be interesting. Be interesting how this all lines up. If we end up getting a pullback in gold with a new dollar high, and you get the divergent trade, and then blah blah blah, middle of January, shaping up to be a super exciting month, that's for sure. Okay, so I think that's pretty much covering it all for now. Okay, is there any particular specific questions that you guys want to ask? If there are, I'd be happy to answer them. And if not, I'll get this archived so you guys can watch it. Oh yes, dollar Swiss, CAD Swiss, okay. Let's take a look at dollar Swiss, of course. So dollar Swiss, same old stuff here for the most part. This is, well, we've come back under 10007 while I was doing this webinar. So we were trading there beforehand. So the two things in the webinar, or as written over last week, there's the risk that this is A and B, okay? And if that's the case, then wave C is underway towards like 95, 78, should be two equal legs. I don't know if that's going to happen or not. I'm just saying that's a possibility. You're still within a pretty good uptrend here. Okay, so as long as we are sticking with a bullish view, we're kind of getting into the limits at this point, I guess, of where you'd want to see weakness in dollar Swiss. Obviously, the stop at this point is a little better than break even on the rest of the position. So I just kind of like let it do its thing. And if it's going to go higher, it's going to go higher. Okay. The fact that it didn't want to hold 99.90, not a great sign. If it turns around, trades up here at the end of the day, then great. Might look at something after NFP tomorrow, which just reminded me. I wanted to show you NFP stuff for tomorrow. All right, so okay. I'm going to go back real quick and this is looking at Euro futures, okay? Something for tomorrow to watch for NFPs. This is last January NFPs, okay? You can see you get, literally wait for the first 30 minutes. This is what I would do. That's what I like to do. Wait for the first 30 minutes and then fade whichever way the market closes, okay? And do it in the context of the current market. So if tomorrow Euro spikes up to 109.30 and closes up near that level, it might be a short, okay? So wait 30 minutes and then fade it. This would have been, so that was January's. February's, that would not have worked. It was down and then straight down. March was kind of a wash. It kind of meandered into the lows and then turned up. But then you can see the NFP level actually came in as resistance later in that week. That's another thing to remember. Avery asking about how do we refer to bond charts. Well, that all depends on what kind of environment you're in. So like right now, we're in obviously a really scary risk on, risk off environment. So that means that if we're looking at the bond market right now, this is the bonds. I actually am noticing that bonds are actually not panicky at all, right? Like this is when we crashed on August 24th. And then, so it's the opposite of the stock market. You get a bond top, pull back. This was the October NFP and basically the retest in the S&P. Okay, resistance, stock market bottom, the same thing as bond top. So right now, interestingly, we're getting this late day sell-off in the S&P, and we're getting risk off and everything else, like gold's up, euro's up, yen's up, meaning dollar yen's down. But the bond market's not really saying that. In other words, the bond market's not up here. It's not being, it's not scary at all. The bond market's actually being like saying everything's okay. Okay. So I'm just kind of saying that it'd be really wary about buying into the whole fear thing right here at this point. In other words, you could be in for a pullback, if you will, a stock market rally from here, or, a dollar yen rally. It's all the same thing at this point, a euro dollar decline, all the same thing. So that's how I would factor it in right now. Where were we? Oh, I was looking at these S&P, the charts of the, okay. So that's March. April is into a top, faded. May, that would have worked pretty well as far as fading the initial reaction, the first 30-minute reaction. June, fade the initial reaction. It was into a low. July, nothing really happened after NFPs. It went sideways. But the level itself was actually interesting for a point of reference moving forward. August NFPs was the fade of the century, if you remember that one. I do. So that was fade the weakness, huge rally. September NFPs no one really cared about because there was more important stuff going on. It's what I feel like tomorrow is going to be like, but in any case, it was still a fade. October was a fade. November was a fade. In December, no one really cared about either, but not much happened. So you get what I'm saying. A lot of times it's a fade. So we'll see what that means for tomorrow. Matthew asking about euro pound. Yeah, so saying not real sure what about euro pound. So euro pound, you're saying about, breaking trend line, and it's also a huge bullish pattern, but you're saying you see divergence. I would not classify this as divergence. Okay. I only classify things as divergent when RSI is below 65. And let me show you what that looks like. So I actually have that calculated on this chart. Okay. So you can see the little magenta dots actually indicating when you have a new 60-day high in price and not a new, so it's like 3 months, and not a new 60-day high in RSI, that would be diversion. But RSI also has to be below 65. So you're getting that here. Here it wouldn't qualify. Yes, you have a lower RSI, but RSI is still above 70, which means it's still strong. It's a strong move. So you would not call this divergent. Okay, at least I wouldn't, because those are going to be the false signals. For all you know, RSI is going to go to 80. Okay, So yeah, I would not classify this as divergence. I would, what you're saying is, what do I believe? Do I take the trend line break, or the divergence? Take the trend line break. Okay. Not saying you can't pull back a little bit, and if you do, since it's the start of a new year and everything, we've got some really nice levels to work with, right? 73, 75, top side of this trend line, 73, basically 74. You could get a pretty good support hold there. Okay, and then finally I had a question on a pair that I don't know if I've ever looked at before, but it was CAD Swiss. Okay, so let's see here. I have I guess you would say that you've got a triangle here. Okay. I honestly, it's not something that I would trade. I would trade dollar CAD. I would trade dollar Swiss. And again, I would look at, if I were ended up on, opposite sides of the trade, then I guess I'd have a position in this pair. But I wouldn't necessarily look at CAD Swiss. I will note that you do have a level here, so you can see what this is, the weekly reversal level right here. Okay, so if you take that close, 70.73, draw it across, you can see it's actually been a level that's held recently. The low in December was 70.72. You're right back at it again, in fact, at 70.72 as I speak. So you do have something here as far as a level's concerned. The momentum obviously on the downside is pretty firm at this point, but look, this is a range, okay? You can see the daily reversal, how that works out. So 70.27 and 70.72, which is now, are two levels to watch for. Okay, I believe who asked? I believe it was Hossein who asked about that. Yeah, Hossein. Okay, so you've got maybe something to work with there if you want to trade CAD Swiss, maybe 70.27 for support. And if you think about the two pairs, the two legs of that cross, dollar CAD and dollar Swiss, obviously with the Swiss part of the leg, we're in an uptrend of dollar Swiss, but if the market completely falls apart and crashes, then I guess you've got dollar Swiss heading a lot lower and euro going higher and what have you. Okay, but then we'd be looking at that ABC correction in dollar Swiss. If dollar CAD is topping, which I do think there's a better possibility of that happening, okay, coming into a top, again, talked about completing 5 waves up, all that good stuff, then you might be, in for, a bigger bounce off this level as well, 70.27. So Hossein, I would watch 70.27. It's also a trend line, as well as basically right now, 70.72 in this CAD Swiss deal. But, looking at this thing just stepping back, I mean, you do have, pretty nasty, this is the intervention, but you do have, a wide-ranging, basically year-long consolidation, which if it breaks, you'd have to look to the downside here. Okay, but again, this is not something I would necessarily trade, and probably for this reason, basically you start looking at so many things and getting caught up in what you're looking at rather than executing the ideas in front of you. Okay? All right. Raj asking what I've got on. Well, I'm in this pretty light right here early in the year, Raj. I'm still long some dollar Swiss. I'm short some Kiwi. I've been in a short Kiwi since December 18th. And I did buy some pound today, this morning. So that's about it. But it could be out of the pound quickly, so we'll see. All right, man. Okie doke. All right, so everyone, take care. I'm really going to end it here. It's been a pretty long webinar for the first one of the year, but lots to talk about, obviously. So takeaways here from this webinar, I would say pay attention to S&P 1900 if we get there. Certainly a possibility. We're only 45 handles away, down already over 50 right now. The DAX, probably the most important one, pay attention to 9800. It's just below us. It might be 9760, but you get the idea. Euro dollar. 109.20, or sorry, yeah, 109.25. Okay. It's a big level. As long as you're 109.25, you could trade lower. I don't really want to fight anything over that, however. Okay. Dollar yen. Median line at 117. Obviously, given the chaos going on in markets, if that level breaks, it's waterfall lower, and that's when you get your panic, and then you could get the rebound. But so don't go long here and don't put a stop on it because you pay for that dearly. Those are the big things I think at this point. Kiwi is interesting because it's kind of like trying to hold its own instead of its own big spot here, trend line and all that. So if there is something to fade, this might be it because you do have a really tight stop. But again, first week of the year, calm in the chaos. All right. Okay, so that's it. Take care. I'll have an update out for you later tonight. All right, I'll get this archived. Take care, guys. Bye.